now in conversation with Manish Gangwal. He's the Chief Financial Officer at the company. Manish, good morning and thanks for taking the time out. How are you looking at the quarter gone by? Your key areas in which you performed, perhaps some misses, and also the kind of pricing environment you're currently facing at the moment?
Yeah, good morning. Thank you for having me. First of all, I would like to say that it was a good quarter for us, very positive quarter considering that it is a seasonally low quarter where, monsoons play and then the commercial activities and infrastructure activities slightly slow down. We delivered a strong 9% volume growth for Q2, which is clearly 2 to 3x the market growth. So we have been continuously delivering 2 to 3x market growth, and our trend continues from the volume gain perspective, and we continue to gain thereby the market share. Overall, profit-wise also we delivered 15% growth in profit after tax for the quarter, and for H1 the PAT growth is nearly 22%. So overall, good positivity around the business in spite of seasonal slowdown. Overall, we are seeing, especially in the rural segment also, we have seen that demand coming back, and hence our channel business and our motorcycle and agri business also has done good in the quarter in terms of growth.
Gangwal, hi, it's Amina joining in as well. You've maintained an EBITDA margin guidance in the range of 12 to 14%. You want to tell me the reason for that, and also if you do see conditions improve, is there a potential that you might exceed the upper range of your margins going ahead?
See, so we have been maintaining a guidance of 12 to 14% because our game plan is twofold. We want to continue our volume growth 2 to 3x the market and deliver a decent margin in the guided band of 12 to 14%. You will see that our volume growth continues to be 2 to 3x the market. And at the gross margin level, you will see in the quarter two that there is an improvement by nearly 100 basis points. But we had a mega campaign, you must have noticed during your visits to any of the theaters during the last 1 month, if you have gone to any movie or on the road outdoor hoardings. We have our best ever campaign or mega campaign, I would say, the Unstoppables during the quarter, which started in September, and for the improvement in our product and brand visibility. And that, of course, has taken a slightly more A&P expense during the quarter, nearly 50 basis points of the revenue, more than what we usually do. So I would say that we are around 13% margin band plus minus overall, but we have invested more in our brand during the quarter, and also we are improving our organizational strength by getting new people on certain new segments and the current segments also.
Manish, can you also elaborate on your B2C business specifically in this case? Going forward, can we expect the kind of strength in volumes that we have seen as what we have in the past? And which of these sub-segments, would it be motorcycles, agri-channel, retail? What is it that could potentially drive growth from here on, and for growth for your volume specifically?
We see that actually December quarter and March quarter are the good quarters for lubricant business, and we continue to aim to grow 2 to 3x in our B2C channel as well. Motorcycle and agri segment is depending on rural. We are seeing positivity in the rural now. For the last 1-2 quarters, we have been talking about rural growth coming back, and we see that in the growth of motorcycle and agri business. Our focus also continues to grow our passenger car segment, where we have a relatively lower market share, and in the B2B side also we continue to do double-digit growth across all our B2B and infra customers. So overall, all-round volume growth is what we are targeting, but with special focus, as you rightly mentioned, on the channel side, where we want to continue to grow 2 to 3x the market, especially in categories where rural is very strong.
Exports have doubled, or rather grown in double digits, and that's actually helped your top line quite well. Into the second half of the year, what is the growth on exports that we can expect, and what will it do for your revenue?
Exports as a category or as a segment for us is a relatively lower segment. It's only 5-7% of our volume. But we are seeing good traction in the export market, especially for the Gulf branded products in the neighboring countries. Also, we are exporting a lot of OEM related co-branded products to many geographies now. With more than 25 countries, our products are going from India. And that's where we see continuous traction in export, good demand, but it's only 5-7% of our volume. So the overall contribution to the top line, bottom line is relatively small in terms of contribution.
So AdBlue volumes have declined. Is that largely because of seasonal factors? And give us a sense of what you're anticipating in demand turning around or going, swinging in that sense into the next few quarters if this was because of a seasonal impact.
So our AdBlue category, you would have noticed that last 2 years we have grown significantly from 18,000 KL annual volume to nearly 1,20,000 KL annual volume in the last 2 years. So it has grown 5 times, 6 times over the last 2 years. So obviously it is on a very high base now. And of course in Q2 there was a seasonal impact. Plus we are also seeing some sort of a bypass which is happening in the AdBlue. But we are sure that overall for the full year we will still end up with a double-digit growth on AdBlue, and H1 growth is also double-digit. So we hope that the demand now conditions will revive back in Q3 and more so in Q4.
Thank you, Mr. Gangwal. Congratulations. Good luck. It's been a good quarter and hopefully it continues going ahead as well.